Hi students, this is Professor Vikrant Palacha. I welcome you all in the class of the Financial Accounting section. Today we are going to discuss about the unit Accounting for Leases. So let's start our discussion. Accounting for Leases. So first of all, general meaning of the lease. What is lease? Lease is contract calling for the lessee, who is the user, to pay the lessor, who is the landlord, for the use of an asset for a specific period. So, lease allows a corporate business to get major piece of equipment with no large expenditure of cash. Means without expending so much money. Under that, the business organization, the corporate can enjoy the right of the asset. That's why lease is a very useful for the business organization. Now, a specific meaning of the lease. A lease is a contract between a lessor and a lessee for the hire of a specific asset for a specific period on payment of specific rentals. The maximum period of lease according to law is for 99 years. But now, today's plant and equipment, modern civil aircraft, and ships are also taken on lease. Earlier, land or real estate mines and quarries were taken on lease, but nowadays these new things are also included in the lease contract. In the lease, always there are two parties, those are involved. Under that, first one is the lessor. Lessor is the party who is the owner of the equipment permitting the use of the same by the other party on payment of a periodical amount. And second one is the lessee, is the party who acquires the right to use equipment for which he pays periodically. So these are the two parties, those are involved under the lease. Now, the next and most important types, that is the types of leases. Generally, there are four types of leases. One is the financial lease, second one is the operating lease, third one is the leverage lease, and last one is the sales and lease back lease. So one by one, we have discussed about this. First of all, number one, a financial lease. It is also known as various names such as full payment lease, capital lease, long-term lease, net lease. In financial lease, the contractual period between the lessee and the lessor is generally equal to the expected full economic life of the equipment. The lessee selects the equipment, settles price, terms and conditions of the sales, and arranges with the leasing company to buy it. The lessee is normally responsible for maintenance, insurance, and taxes, and for the reason financial lease are also called as the net leases. Original cost of the asset is fully amortized. The agreement or deed provides that the lease will cover the service life of asset. So it is the financial lease. Now, second one comes, it is the operating lease. An operating lease is also known by short-term service maintenance or true lease. In operating lease, lease facilities provided on period basis. The contractual period between the lessor and the lessee is generally less than the full expected useful economic life of the equipment. Under this arrangement, no long-term obligation is imposed on either the lessor or lessee, and arrangement is cancelled at the option of either owner or user of the asset after giving a certain stipulated notice. So it is the operating lease. Now, third one, that is the leverage lease. Leverage lease is designed to provide financing for assets which require huge capital outlay. Under leverage lease, the equipment is usually purchased by an equity contributor or group of contributors who invest 20% to 50% in the cost of equipment. The lessor is the equity participant. The financial institution usually provides loans against the mortgage on the asset as well as by the assignment of the borrower. As the owner of the asset, he is entitled to deduct all depreciation charges associated with the asset as well as utilize the entire investment allowance facility. So it is about the leverage lease. Now the last one, that is the sales and leaseback lease. Under the type of lease arrangement, an entity that owns a given asset sells it to the leasing company and gets it back on lease. This enables the lessee to immediately recover the money. Therefore, sales and leaseback lease is called as the sales and leaseback lease. Okay. So, in this way, there are four types of lease. First of all, financial lease. Two parties are there, lessor and lessee. If the duration is long term, and the maintenance cost has to bear by the lessee under here. Then operating lease, again two parties are there, lessor and lessee. It is short term and the maintenance is borne by the lessor. Sale and leaseback lease, lessor is the buyer and lessee is the seller. It is also a long term duration and here the maintenance is borrowed by the lessee. Last one is the leverage lease, lessor, lessee and institutional lessee is there. Duration is long term and then the maintenance is borne by the lessee. So these are the four types of lease. In our syllabus, we have to study only two types of lease. One is the finance lease and another one is the operating lease. Already I told you the meaning of the finance lease. Under the finance lease, the two concepts comes under, first of all, the hire purchase system and second one is the installment system. So under a hire purchase system, the purchaser acquires the possession of the goods immediately and agrees to pay the total hire purchase price in installment. Each installment is treated as hire charges until the payment at the last installment made to the owner. And when the payment of the last installment is made to the owner, at that time, the rights of the ownership of goods are transferred to the lessee, to the purchaser. That is the major highlighted point under the hire purchase system. Okay. Under the hire purchase system, the purchaser acquires the possession of the goods immediately and agrees to pay the total hire purchase price in installment. Each installment is treated as hire charges until the payment of the last installment and ownership of goods passes from the seller to purchaser. Means when the last installment is paid, at that time ownership is transferred to the purchaser. But under installment system, seller transfers the title of goods to the buyer immediately after the transaction has taken place. The last installment may not be paid by the buyer. In short, under installment system, sale is outright, but payment is by installment. As the ownership is transferred to the buyer, the seller does not get the right of repossession in case of any default payment. Okay. Now we have to see what is the difference between these two, means hire purchase and installment. First of all, hire purchase is governed by Hire Purchase Act 1972 and installment system is governed by the Sales of Goods Act 1930. Hire purchase system, it is an agreement of hiring, and installment system, it is an agreement of sale. Under a hire purchase system, the title of goods passes on payment of last installment, but under the installment system, the title to goods passes immediately as the case of useful sale. Under the hire purchase system, the parties involved are called hirer and hire vendor, and under the installment system, the parties involved are called buyer and seller. Under the hire purchase system, component other than cash price included in installment is called as hire charges. Under the installment system, component other than cash price included in installment is called as interest. Okay. So these are the highlighted difference between the hire purchase system. Okay. Now hire purchase system is one whereby the owner of the goods lets them hire for periodic payments by the hirer upon an agreement that when a certain number of payments have been completed. Okay. Now we have to see how the hire purchase system is elaborated or how it is regulated. regulated. Okay. So under the hire purchase system, some kind of terms are utilized. Number one, that is the hirer. A hirer means a person who obtains or has obtained possession of the goods from an owner under a hire purchase agreement. Then second term is hire vendor. Hire vendor means person who delivers or has delivered the possession of goods to the hirer under a hire purchase agreement. The number third one is the cash price. Cash price means the price at which the goods may be purchased by the hirer for cash. Then number fourth is the down payment. Down payment means an initial payment payable by the hirer at the time of entering into a hire purchase agreement. Hire purchase price. Hire purchase price means the total sum payable by the hirer under the hire purchase agreement in order to complete the purchase of acquisition of property in the goods. Hire purchase price is equal to cash price plus interest on outstanding balances. This one is the important one to remember. Hire purchase charges. Hire purchase charges means the difference between hire purchase price and the cash price as stated in the hire purchase agreement. The next one is the hire. It is the sum payable periodically by the hirer under an agreement to the hire vendor. Then next one is the installment. It is the amount inclusive of principal and interest paid at the end of a certain period. The next one, net cash price. It is the cash price less any amount of deposit. And finally, depreciation on asset under hire purchase system. Depreciation should be provided as a matter of policy in the books of buyer. Depreciation should be charged on asset every year on its cash price. Okay, understood? So, it is about the terms those are involved under the hire purchase system. Regarding the hire purchase system and installment system, we just have to consider a theoretical point in our syllabus. The problem will not be asked on the hire purchase system and the installment system. So, we are just understanding the theoretical aspects of these two. So next one comes, that is the installment system. Under the installment system, the possession as well as ownership passes from the seller to the buyer immediately on signing of the contract, but the buyer agrees to pay the total price in installment. In installment purchase system, if the buyer makes any default in the payment of any installment, the seller has no right to repossess the goods, but the seller has a right to take the legal action to recover the amount due. Okay, understood? So it is about the installment system. I already told you hire purchase and installment system. These are for the theoretical aspects only. Okay. Now the next type of lease, it is the operating lease. Already we have discussed the meaning of the operating lease. Now under the operating lease, the concept comes that is called as the royalty accounts. Okay, now royalty accounts. What is in that? First of all, what is the meaning of royalty? The term royalty means a periodic payment for the use of a certain property or right, like mine, patent, copyright, to its owner. In other words, it is a payment made for having a privilege of using some right. This right may be any of the following types. Number one, a right to extract minerals from the mines. Number two, a right to use certain patents for manufacturing any article, and right to publish books and sell them. Okay. Now there are three types of the royalties. Number one is the mining royalty, where the owner of mine allows another the right to extract mineral from mines. Usually this royalty is based on auction. Patent royalties, where the right such as patents or copyright are licensed in favor of another. Usually this royalty is also based on the auction. And third, that is the copyright royalties, where an author, artist, or designer gives exclusive rights to another to copy the work. Usually this royalty is based on the sales. Understood? So in this way, these are the types of the royalty. Now the important terms, those are involved under the royalty accounts. In that, first of all, lessor. He is the owner or landlord of the property or fixed asset. He is not using the asset, but allows the use of the same to some other person who is using for earning profit. The next one, that is the lessee. He is the one who has taken the asset from the lessor for utilization purpose. He is only the occupier and user of the asset, is making the payment to the landlord in the form of royalty. Now the next one is lease agreement. The agreement which is prepared between lessor and lessee, and terms and conditions of the lease, bills of the royalty are mentioned in that is called as the lease agreement. So the next one comes, that is the rate of royalty. Is the rate per unit of output at which the lessee is required to pay royalty to the lessor. The next one, that is the minimum rate. This is the minimum amount which is to be paid by the lessee to the lessor per year, irrespective of the output drawn. This is also termed as dead rent or rock rent or fixed rent. Since this is independent of output, the word rent appears. Okay, so it is independent than the output. That's why the rent, particularly the word rent, is used there. It will cover a range of output up to that this sum is payable. Thereafter, the royalty calculated on the basis of output will be payable. Understood? So it is about the minimum rate. Now next one, short workings. When the royalties payable works out to be less than the minimum rate, the difference between is called as a short working. In other words, it is the difference between minimum rate and royalty payable. Therefore, what is the formula? Short working is equal to minimum rate minus royalty payable. For example, royalty per ton of production is ₹100 and the minimum annual rate is ₹5 lakhs. Now, if the actual production is 3,000 tons, then the royalty will become 3,000 into 100, that is 3 lakhs. Therefore, the short working is ₹2 lakhs, that is 5 lakhs. It is the minimum rent minus ₹3 lakhs, that is the royalty, is equal to ₹2 lakhs. It is the short working. Understood? So it is about the short working. Now, recoupment of short working. Generally, the royalty agreement contains a provision for carrying toward of short working with a view to adjust it in the future. In the consequent years, such short working is adjusted against the surplus royalty. This process of adjustment is called as the recoupment of short. So, whenever there is a surplus in the royalty, at that time, these short workings are adjusted towards, and it is called as the recoupment of short working. Now, lapse of short workings. The time is usually set up with the number of years for which short workings can be recovered. This time limit for recoupment of short workings may be used and fluctuating. In the short working, that is partly or wholly cannot be recovered within the specified time, lapse and are charged to profit and loss account in the year when that specified time limit for the recoupment ends. Therefore, short workings are the lapses of the losses of the lessee. Short workings are the losses of the lessee, not in the year of their occurrence, but in the year they lapse. Okay. So whenever this short working, there is a particular time limit is given to recover the short working. If the short working those are not recovered during that given time limit, the short workings remain. Those are called as the lapse of short working, and then those will be treated as a loss in which year that is lapse, and it is for the lease. Understood? The right to recover short workings. When the lessee draws less output than a minimum rent, he has to pay the minimum rent as stipulated earlier. Many times the lessee may take time to settle in the market. It may also take some time to develop market for the product. Therefore, he may not operate at higher levels immediately. In such cases, if the agreement provides such short workings can be adjusted with the subsequent year's surplus output. This is called as right to recover short working. Normally, it is allowed only for a limited number of years. If the short workings is not recovered within that period, then the right will lapse. Therefore, this kind of right is given to the lessee, and in the mean period, the lessee has the right to return the short working. Now, last term is there, that is a strike, lockout, or accident. What is that? So, uh, in the event of strike, lockout, or accident, the minimum rent can be reduced proportionately only when there is an agreement. There is an agreement to that effect between the parties. Otherwise, as per Section 56 of the Contract Act, the strike and lockout will not be excused for a reduction in the minimum. So, whenever there is any kind of strike, any kind of lockout, any kind of accident, the minimum rate proportionately reduced. Now, the last one is memorandum royalty statement, or it is called as the royalty working statement. So, whenever the royalty accounts are prepared or the entries are recorded in the books of lessor, that is landlord, or in the books of lessee, at that time, first of all, royalty working table is prepared, and this is the format of that. Okay, first column is year, then production, as per the output, then rate of royalty, then amount of the royalty, then minimum rate, then short workings. Under the short workings, first table is recovered short workings, second one is the suffered short working, and third one is the return of short workings, and the last one is payment to landlord. During the regular lectures, we have solved the many problems regarding this, so all of you now familiar with how to prepare the royalty working table. Okay. Now we have to just look on the entries to the recorded for the accounting treatment of the royalty. First of all, journal entries and later journal entries in the books of the landlord. So first condition, if royalties are less than minimum rent and short workings are recoverable out of the future years, at that time these entries are recorded. Condition is what? Royalties are less than minimum rent and entries we are recording in the books of the landlord or lessor. First entry, when the royalties receivable are due. The entry is lessee's account debit to royalties receivable account to royalties suspense account. Then number second, when the royalties are received, bank account debit to lessee's account. And number three, transferring the royalties receivable to the profit and loss account. The entry is royalty receivable account debit to profit and loss account. These entries are recorded in the books of landlord or lessor when royalties are less than minimum rent. Now next one, when the royalties earned are more than minimum rent, when it is exceed the minimum rent, at that time these entries are recorded in the books of the lessor or landlord. First entry, when the royalties receivable are due, the entry is lessee's account debit, royalty suspense account debit to royalty receivable account. Second, when the royalties are received, bank account debit to lessee's account. And number three, transferring the royalty receivable to the profit and loss account. The entry is royalties receivable account debit to profit and loss account. And now, if any balance of royalties account or short working suspense account is no longer recoverable, it should be transferred to profit and loss account as follows: royalty suspense account debit to profit and loss. Understood? Now, next entry, those are recorded in the books of the lessee. Again, first condition is same: royalties are less than minimum rent. When royalties are less than minimum rent, these entries are recorded in the books of the lessee. When royalties payable are due, first entry, royalties account debit, short workings account debit to landlord account. Okay, here minimum rent account is not open. Okay, then second entry, payment of royalties, landlord account debit to the bank account. And third entry, transfer of royalties to the profit and loss account. The entry is profit and loss account debit to the royalties account. And now the next one, when the royalties payable are more than minimum rent, means royalties are more than minimum rent. At that time, the entries are recorded. First entry, when royalties payable are due, royalty account debit to landlord account to short working account. Then second entry, payment of royalties, royalties account debit to bank account. And third entry, transfer of royalties to profit and loss account. The entry is profit and loss account debit to royalty account. And fourth entry is recorded if any kind of short workings are written off. When written off short working means what? When the recovery period is lapse, means lapse of recoupment of short workings. At that time, such entry is recorded, and that payment should be transferred to where? To the profit and loss account, and it is called as the written off short workings. And the entry that is profit and loss account debit to short working. Understood this? So in this way, this is the theoretical aspect regarding the accounting for leases. Now, this kind of MCQ question will be asked on the royalty account, or it is called as the accounting for leases. Already I have sent this file on your WhatsApp group. Once again, I am revising for you. Royalty is dash dash to leasing. Income, expenses, both A and B or none of these. The right answer is expenses. Excess of minimum rent over royalty is called as short working, straight rent, royalties, or none of these. The right answer is short workings. All the royalties and short workings, if recoverable, should be transferred to trading account, balance sheet, profit and loss account, or none of these. The right answer is profit and loss account. Then, royalty account is in the nature of real account, nominal account, personal account, revenue account. The right answer is nominal account. When royalty is paid in the books of lessee, it is debited to royalty account, profit and loss account, landlord account, lessee account. The right answer is landlord account. Short working means excess of minimum rent over royalty, excess of royalty over minimum rent, surplus of royalty or actual minimum rent. The right answer is excess of minimum rent over royalty. Then royalty is the agreement between the following persons: seller and buyer, banker and customer, trustee and beneficiary, landlord and lessee. The right answer is the landlord lessee. Minimum rent is also called as outstanding rent, dead rent, prepaid rent, or future rent. The right answer is dead rent. Royalty payable is debited to dash by lease, royalty account, profit and loss account, landlord account, and trading account. The right answer is royalty account. What type of royalty to payable on the basis of sale? Mining royalty, patent royalty, copyright royalty, none of these. The right answer is copyright royalty. Okay. Then mining royalty and patent royalty are payable on the basis of output, sales, output and sales, and none of these. The right answer is output, that is production. If the royalties are rupees 1.20 per ton with a minimum range of rupees 6,600 and actual output is 5,200 tons, then the short workings will be rupees 400, rupees 360, rupees 500, rupees 300. So how to calculate it? Output into rate of royalty, that is 5,200 into this 1.20, so it is 6,240. Therefore, it is deducted from the minimum rate. Minimum rate minus royalty. So 6,600 minus 6,204. The right answer comes to this 360. Minimum rent minus royalties payable is equal to dead rent, royalties, short workings, none of these. The right answer is short workings. If there is any stoppage due to strike or lockout, the dash dash may be reduced proportionately. Minimum rent, short workings, royalties, none of these. The right answer is minimum rent. When an asset is acquired on hire purchase system, the asset account is debited with dash dash of the asset in the books of the hire purchaser. Hire purchase account, hire purchase price, cash price, installment price, or none of these. The right answer is cash price. Ownership of goods under hire purchase agreement is transferred at the time of payment of down payment, payment of first installment, payment of the last installment, and none of these. The right answer is payment of the last installment. Question number 17. What is transfer to hirer under hire purchase system? Ownership of asset, possession of asset, ownership and possession of asset, none of these. The right answer is possession of asset. Hire purchase act is passed in the year 1952, 1956, 1972, 1872. This right answer 1972. Under hire purchase system, the buyer is called buyer, hirer, hire vendor, or debtor. The right answer is the hirer. Under hire purchase system, who has the right to say buyer, hirer, hire vendor, debtor? The right answer is the hire vendor. The installment system is governed by Hire Purchase Act, Sale of Goods Act, Installment Act, Property Registration Act. It is number 2nd, that is the Sale of Goods Act. Cash price plus interest is that as installment price, hire purchase price, maximum retail price, or retail price. The right answer is hire purchase price. The entire treatment of for installment system is made on the basis of dash higher purchase system, interest suspense method, both A and B, and the last one that is none of these. The right answer is interest suspense method. Then in installment system, interest payable is transferred to dash account, asset account, cash account, depreciation account, and interest suspense account. The right answer is interest suspense account. And the last, in installment system, the depreciation is provided and dash value of asset. Full book, market or none of these. The right answer is full value of understood. So in this way, the MCQ questions will be asked on the accounting for leases. Understood, students, about the accounting for leases? I hope that you have liked my video. Still, you have any doubts, you can ask your doubts on our WhatsApp group. Till then, stay at home, stay safe, and most important, concentrate on your study. If any doubt, you can ask me anytime on our group. I request you kindly like my video, share it more, and subscribe my YouTube channel for the videos like this. Thanks all of you.